Next is facilitates control over assets. Under this, accounting facilitates control over assets. Okay, control over assets by providing information regarding cash balances, bank balances, stock, debtors, fixed assets. Okay, this accounting facilitates providing information. So this is a facilitates control over assets. Now see what are the limitations and disadvantages of accounting. Disadvantages. Disadvantages and or limitations of accounting. So where advantages will be there, so in that case there are several disadvantages also there. So here what are the limitations here? So first one is records only, monetary transaction, records only monetary transactions. Next is effect of price level changes, not consider. Effect of price level changes not considered. Next is no realistic information, no realistic information. Next is permits alternative treatments, permits alternative treatments. Next, historical in nature. Next is window dressing in balance sheet. Window dressing in balance sheet. Okay, so these are the several disadvantages or limitations of accounting. So under this first one is what? Records only monetary transactions. So in financial accounting, records only monetary transactions. Now, where there is transaction with money is it, then only we have to write entries in the books of accounts. Okay, accounting records only those transactions which can be measured in monetary terms. Okay, those transactions which cannot be measured in monetary terms as conflict between in monetary terms as a conflict between the production manager and the marketing manager or efficient management. So it may be a very important for a concern but not recorded in the business book. So that non-monetary transactions are also important to the business but not recorded in the books of accounts. Only we record the monetary transaction is one of the limitations of the accounting. Next, second one is what? Effect of price level changes not recorded. So any price level changes means that price is sometimes increasing or decreasing. That changes are not considered. Okay, so that in accounting transactions are recorded as it cost in the books of accounts. Okay, so when you have to purchase any assets, at that how much is a price is it, that price only recorded in the books of accounts. So in a day to day our market prices are changes now, so these price changes are not considered in the books of accounts. So the effect of the price level changes is not brought into the books, with the result that comparison of the various years becomes difficult. So this is a effect of price level changes not considered in books of accounts. Next is no realistic information. So accounting information may not be realistic, as these accounting statements are prepared by some concepts and conventions, are the accountant are prepared on the basis of these accounting standards now. So these accounting statements are prepared by following basic concepts and conventions. Example is going concern concept give us an idea that the business will continue. Going concern means what? Lead a long life. Okay, that business they want to run on a long period of a time, that is 15 years or 20 years. At that time the business will continue and assets are to be recorded at a cost. Assets are recorded at the cost, but the book value which the asset is showing may not be actually realizable. They want to record an asset value at the cost price only. Similarly, by following the principles of conservatism means what? We concentrate only the losses incurred. So but the principle of conservatism, the financial statements will not reflect the true position of the business. According to the principle of conservatism, the financial statements will not give a true position of the business, is one of the limitations of accounting. Next is permits alternative treatments. Next is permits alternative treatments. In accounting, the alternative treatments within the generally accepted accounting principles. Gap. Okay, important term is under this treatment is gap. What is the full form of gap? GAAP. Generally accepted accounting principles. Accounting principles means what? Accounting concepts and accounting conventions. Under these, the methods of charging depreciation may be either straight line method or diminishing balance method or some other method. Or similarly, while coming to the inventory, the closing stock is may be valued by FIFO method or LIFO method. So applications of different methods may give different results, and that results may not be comparable. So alternatively, suppose in accounting we are doing one, we want to follow one standards. In that standard several alternatives will be there. For finding that alternatives, results or may not be comparable, because see come to the depreciation. So depreciation means what? Every year the asset value is to reducing. Okay, under that calculation of depreciation also straight line method is there, diminishing balance method is there. Under straight line method we calculated the depreciation amount is different, and when we calculate depreciation under diminishing balance method is different. So at that time the different results may not be comparable. So and next limitation is what? There is an alternative treatments in the accounting. Next is historical in nature. Next is historical in nature. Under the accounting supplies information in the form of profit and loss account and the balance sheet at the end of previous year. Okay, so the information provided is of a historical interest and only gives a post-mortem analysis of the past accounting information. So for this control and this planning purposes, the management is interested in quick and timely information which is not provided by financial accounting. Whenever we have to do this accounting process, we have definitely comparing with the previous year. Okay, they want to provide information in a historical interest only. So this is a historical in nature. The next is window dressing in balance sheet. Window dressing means what? So under this, it cannot give true and fair view of the state of affairs of the business, showing false amounts, showing false accounts. Okay, so under this how much is the amount is there, but under this window dressing showing as a another amount. So in one account 950 is the closing balance, but and while coming to the books of accounts it will be shown as an a 590. Okay, so false statements of books of accounts, so it cannot give true and fair view of the statements of affairs. So when an accountant resort to window dressing in the balance sheet, so then that time the balance sheet cannot exhibit or cannot give the true and fair view of the state of affairs of the business. So these are the disadvantages and or limitations of accounting. Next is branches of accounting. Next topic is branches of accounting. Accounting provides information to different end users which helps them in analyzing the financial position. Okay, the accounting provides accounting provides information to different end users, which helps them in analyzing the financial position. So generally this it is classified into three types. They are see here accounting, three types now. Under this one is financial accounting, next is cost accounting, next is management accounting. These are the branches of accounting. One is financial accounting, second is cost accounting, and next is management accounting. These are the branches of accounting. So first is what? Financial accounting. We know the meaning of this financial accounting. This financial accounting deals with the preparation of financial statements. Okay, it deals with the preparation of financial statements such as profit and loss account, balance sheet. So in mainly financial accounting we prepare the profit and loss account and balance sheet now. So it helps in communicating the according information, okay, communicating the according information of the business to its end users such as shareholders, employees. So the main objective of financial accounting is what? The main objective of this financial accounting is to analyze profit or loss and to depict this financial position of the business. Main objective is to analyze a profit and loss account and we give the interpretation on the financial position of the business. So in order to accomplish these objectives, it is very essential, yeah, it is very essential to maintain a systematic record of business. Is to maintain a systematic record of business transactions in accounting books. Okay, this is a financial accounting. Next is what? Cost accounting. What is the meaning of the cost accounting? Cost means what? Expense. So whenever you went to the shop, so how much is the cost? Cost means you have to pay some amount of money for that good now. So under this, if for overcoming the drawbacks of the financial accounting is a new branch of accounting is known as an a cost accounting was developed. The main aim of this cost accounting is to evaluate the actual cost incurred by the business in producing the goods and services. For any business producing goods and services, how much cost is incurred. Okay, so with the help of the cost accounting, a businessman can decide the price of a product and can eliminate losses and wastes by controlling the cost. So for producing goods and services now, so for that producing, some expenditure will be incurred. So with the help of a businessman can decide the price of the product. So when fixing the price of the product, so how much is the expenditure incurred, okay, all this or we have to fix the price of the product. Okay, so this is a cost accounting. Mainly this is evaluate to actual cost incurs by the business in producing goods and services. Next is management accounting. What is the meaning of the management accounting? Under this, management accounting helps in providing accounting information. Okay, helps in providing accounting information to the management so that effective decisions can be taken. So that effective decisions can be taken for carrying out the business smoothly. For carrying the business smoothly. So it facilitates the management in developing policies and monitoring the functions of the business. Okay, under this management accounting, managers can taking the decisions, makes the plans for the future. So mainly the management accounting deals with the future plans and policies. So this management accounting provides information whenever it is required by the management. So this is the meaning of the branches of accounting. Okay. That next class we discuss a very important topic is accounting principles. Definitely this question will come in examinations. Okay, this is our today's class.